Welcome back. I'm Pratap here. Today is the 7th November 2023. So before we generate daily demand and supply zones, let us quickly evaluate the performance of the high liquidity zones generated in our yesterday's report. So from this list, we have identified ABC Capital, HDFCAMC and ABB, Coromandel, ICICICRULI Prudential and Tata Motors. So this is the list from our yesterday's report. Let us look into each of these stocks. ABC Capital is not yet entered into its demand zone. Actually, it is a very interesting chart. You must keep it in your watch list. Look into this stock. Currently, this stock is at its monthly demand zone. Inside monthly, there is a weekly demand zone. Inside weekly, there is a daily demand zone. And this daily demand zone is a high liquidity demand zone. Already price entered into this high liquidity demand zone third time recently. That is on 26th October. After that, it has moved up. Now again coming near to the daily demand zone. But we fine-tuned a 75 minutes demand zone inside this. But most of the time, you know what happened? Prices may not enter into the 75 minutes demand zone. See, the last three occasions just reached the daily demand zone, went up. Again, daily demand zone, went up. See the move. Again, daily demand zone, it has given a good short-term return. This is what happened when our demand zone is inside a weekly demand zone. That weekly demand zone is inside a monthly demand zone. This concept is called zone confluence. And moreover, this daily demand zone is a high liquidity demand zone. So price did not reach into this zone. And HDFC AMC, we have seen this stock has given continuously some returns. Even today we got the return. We got a short trade today. But it is an aggressive trade. Previously, one of the videos I explained what is an aggressive trade. So generally, what is our high liquidity zone strategy? For daily time frame high liquidity, we treat that as a HTF time frame, that is higher time frame. Then we go one time frame lower, that is 75 minutes. And we find a fresh 75 minute zone and there we take an entry. To minimize the risk, what we do, that 75 minute zone we fine tune to either 15 minutes or 5 minute zone to accept our trade, to minimize the risk. Then what is aggressive trade? Aggressive trade is one, we don't directly look into this 75 minute zone. We look for a fresh 15 minute zone by ignoring the 75 minute zone. And when you have to do, if your price action is in your favor, then you can go for this aggressive trade. Last time also I explained once, I'll explain once again today for this scenario. Let me go to the 15 minutes time frame. This is a 15 minutes time frame. Yesterday, a fresh 15 minutes supply zone is created. It is a fresh. But most of the times, these supply zones will be broken easily. That's why we don't take risk going for this trade. We always look inside the 75 minute zone. Inside that we look for a 15 minute zone or 5 minute zone for fine tuning the risk management point of view. But why we want to take this trade? Observe the price action. After it created this supply zone, new supply zone, prices went down and then they are about to enter. Even before entering into this 50 minute zone, see the price rejection. That means there is a heavy order flow is there. Okay, this is what happened yesterday. Then what about today? Today look into this morning 9:15 candle, the 15 minutes candle. Price went near to this fresh 15 minute zone. But before entering into this, again, there was a huge rejection towards the down. From the open, the prices were moved down. That means there is a heavy order flow. But observe here, yesterday's high of this swing and look into the today's high of this swing. Slightly above yesterday, the prices went up. That means there is a heavy supply and demand is trying to capture that supply. Because the supply is very strong, it is pushing the price down. Now again today at 11:15, prices went inside this 15-minute zone. But what I did, I fine-tuned to 5 minutes level. Because to minimize the risk. Because always I want to go for less risk. Okay, if you miss the trade, no problem, because this is an aggressive trade. If it is an aggressive trade, if it goes against you, you should not lose a huge amount of money. That's why you have to minimize as much as possible. If you miss the trade, no issue. Anyway, it is an aggressive trade. If you don't miss, okay, you get an opportunity. If it is stopped out, anyway, you minimize it to the least extent, your loss will be very, very minimal. That is the kind of mechanism you have to apply, especially when you go for aggressive trades. And what happened? At 11:30 candle, just reached into 5 minutes zone. Inside this 15-minute zone, I have fine-tuned to 5 minutes zone. Let me show you the 5 minutes time frame. So here we have a beautiful rally candle, base candle. See the drop. It is an explosive leg out candle. So explosive leg out candle, that zone generally we give good priority. And see the rejections from here. Yesterday, even yesterday, and this is today. That's why the prices went a little inside, again came down, again the demand again pushed the price up. We got our entry here, and now prices came down. After that again prices, they are trying to go inside this zone, but they failed. And finally it came down and reached our target at 1 o'clock 10 minutes. That is 13:10. So at what time we got our entry? At 11:35 we got the entry. And at 13:10 we got it reached the target. And this ICICI HDFCAMC has given 10,125 rupees profit for one future slot, which is a 6.17 return on the investment. Our average is a 6.1%. It just reached that our daily average, daily means intraday average return. So continuously for the last 5 trading sessions, this HDFCAMC is giving returns. It's keep on, every day it is giving return. Maybe 10,000, 11,000, 12,000. That is what we have seen continuously for the last 4 to 5 trading sessions. If you look into the previous videos, you can look into every day we got the return from this. And moreover, the stock is moving between high liquidity demand zone. This is a high liquidity demand zone, and this is the high liquidity supply zone. It's moving. Here we got one entry. Here we got one entry. Here we got one entry. Before that, here these places we found one 5 minutes high liquidity zone. From there, it given first time, second time, third time. Continuously, we've been getting good opportunities from this stock. How long we get? Either the supply should be broken, the high liquidity daily supply, or this high liquidity daily demand should be broken. Until then, we will keep on getting some returns. Because every time when prices are entering into this, institutions are creating new supplies. Those new supplies are giving us the opportunities. But remember, you should not take the deviations. Always you look for a fresh 75 minute zone inside the high liquidity demand zones. You can fine tune that 75 minutes to 15 minutes. And go for such kind of aggressive trades if you are having very good knowledge of reading the price action. Otherwise, don't take the risk. Because I have a clarity why this is going to be a successful. I've been observing how the rejections are coming when prices are trying to reach this zone. I have seen the first time yesterday I observed. Today again, yesterday 2 times, this is the first time, this is the second time, and today this is the first time. And each time it is slowly eating the supply, some of the supply. It is not eating the supply in a huge extent, a small. Look into this swing high and this swing high. A small amount is consumed here. Now look into this swing high and the next swing high. Again a small amount is consumed, but this time it entered into the zone. This is the place we take our trade. We might have missed the trade if prices came down from here. But luckily we got again, it went and again turned into, it reached the actual supply at 5-minute zone and then it pushed the price down. And finally it reached our target. So this is about HDFC trade, what we received, what we got it as a successful trade. But it is an aggressive trade. You should not forget, this is the aggressive trade. Don't go for aggressive trade if you are not having any clarity. Always you have to take 15 minutes or 5 minutes inside the fresh 75-minute zone. You should not forget. You should not take any deviation. If that 75 minutes again high liquidity, probably you get multiple trading opportunities. If it is not a high liquidity zone, you have to look for only one opportunity in that 75-minute zone inside high liquidity daily zone. Let me repeat again. First you have to start from high liquidity daily zone. Then you have to go one step, that is 75-minute inside that high liquidity zone. That 75 minutes should be a fresh zone. After that, you can fine tune that 75-minute fresh zone to either 15 minutes or 5 minutes level up to your risk management level. When prices entered into that area, then only you have to take a trade. So this is the rule for our high liquidity demand and supply zones point of view. Couple of days back, I already explained this concept, how to trade with high liquidity zones in detail with examples. If any new subscribers are listening this video, please watch the video I published a few days back. Okay, the next stock is ABB. ABB is yet to enter into this high liquidity supply zone. I already fine-tuned. The actual supply I found here at almost near the distal line of the daily high liquidity zone. The next one is Coromandel International. Prices entered into the high liquidity demand zone, but it is yet to reach into the 75-minute zone we have fine-tuned. So today it failed to reach to our 75-minute zone. Next one is ICICI Prudential. See what happened today. It stopped out. There is a fresh 75-minute zone here. It is stopped out, right? How much loss we got? But before I tell you how much loss we got, there is interesting thing happened during the intraday. Strictly speaking, intraday we got the profit. Okay, let me start with 75-minute zone. We already found a fresh 75 minutes, the rally, base and drop with gap. But even in 75 minutes candle, it looks like it is stopped out and we got the loss. Yes, we got the loss. If it is a short-term trade, if you would have taken it for the delivery, that means if you might have carried this your trade to the next day, definitely you got the loss. How much loss we got? I will tell you. First we will see how much profit we got in this trade today during the intraday. So let me go to the 15 minutes time frame inside that 75 minutes. So this is the 75-minute zone. and this is fine-tuned at 5 minutes level. Sorry, 15 minutes level, not 5 minutes, 15 minutes level. So we have a drop candle, we have a base candle, and then again we have a drop candle with gap. And this is there inside a fresh 75 minute zone. And look into this. At 13:15, today at 13:15, look into this candle. This is a rally, base rally, a huge rally. This is a high explosive candle. I already explained the candle, the strength of the candles in one of our training sessions. There we have seen a high explosive. Then this demand zone gets a good priority. It is a high explosive. That means the demand is so strong today. Because the demand is so strong, it is easily broken, but it didn't broken easily. The supply in this zone, in this in this 15-minute zone, pushed the price down, and it reached our intraday target. You may expect our intraday could be this 15 minutes level. Yes, in most of the scenarios, 15 minutes level. But today, look into this leg out. This is a very high explosive. When demand is such a strong, you can't expect your returns also should be like this. There are higher chances of breaking the supply when demand is very strong. Because this is a high liquidity zone, inside high liquidity we have a fresh 75 minutes. At least it has given some extent, it has given before it has broken, it has given. Then what should be our target? We have to find in 5 minutes. Let me go to the 5 minutes. But unfortunately, 5 minutes is also, we don't have the same candle, the 15 minutes candle, that is also indicating. But this could be more than 10% return on the investment. If prices would have entered into this area, it could be something around close to 14% return on the investment. So you can't expect such a return on your investment during the intraday. What is our average return on the investment? 6.5, 6.1%. Sometimes we get 7% or 7.5 most of the times. Then how to find our target? So you should not limit yourselves to 5 minutes if you do not have any immediately available target. Look into the 1 minute chart. Then you will understand what exactly happening in this particular chart. See here, the 1 minute candle, how strong it is. Because this is the real institutional pending orders are started from here. That's why they keep on pushing the price. Minute by minute they are pushing. This is 1 minute we have. Again we have a rally candle. Now we have a base candle. Again a powerful rally candle on the 1 minute candle. That is the way the demand increased and finally the supply is broken. But this is a high liquidity zone. At least it has given a push until its next immediately available institutional demand. This is the actual institutional demand. This demand will be reflected sometimes in 5 minutes and sometimes in 15 minutes or sometimes even for 75 minutes. But the real demand is here. And here imbalance has taken place here. In this particular, from this zone, the actual imbalance has taken place. That's why there are a lot of institutional pending orders in this 1 minute time frame. Maybe it looks like a 1 minute time frame, but in that time frame, they might have kept so many pending orders. That's why how these pending orders again pushed. Why easily broken? Because previously this demand itself, almost the prices were close to the distal line of this 5 minutes, this 15 minutes supply zone. Because there are at this near to the distal line, there are institutional pending orders. Those pending orders pushed till the next demand. And this is your intraday return. And what is the percentage, what is the intraday return it has given for ICICI Prudential? It is 7,575 rupees. Within how much time it has given? See, when we got the entry on this candle at 1334, that is 1 o'clock 34, and when it reached the target at 1340, in 1334 you got 1334, and 1340 it reached. In just 6 minutes, the trade is finished. And it did not give a small price. It has given 7,575 rupees, which is 5%, exactly 5% return on the investment. Maybe 1% lesser than our average return on the investment. Why we have to exit? Because the candle is such a powerful. And each time institutions creates a demand zone, there they kept so many pending orders here. That's why this time it is completely broken. Not only this 5 minutes, the entire 75 minutes zone is violated just because of these pending orders inside this zone. Maybe it is a 1 minute zone, but see how powerful it is. It is powerful, much powerful than the 75 minute supply zone. That means in 1 minute candle, they kept so many pending orders. See, it's not the question of it is 1 minute or 5 minutes or it is 15 minutes or even it is 1 day, where actually institutions kept their pending orders. If you are in a position to identify, then your analysis is going to be a perfect analysis. That is what we are observing here. Why we have given so much importance to this 1 minute rally-based rally? Because in the 5 minutes we observed the candle is so powerful. See here how powerful it is. 15 minutes also we observed the candle is so powerful. Even 25 minutes also we observed the candle is so powerful. And even 75 minutes also we observed the candle is so powerful. In all the time frames, that 1 minute level zones actually created this entire move. That's why we have to give priority to that 1 minute zone. That should be your target. You cannot expect it should go beyond this or below this. Because when demand is such a powerful, whatever the return you are getting, you have to take and you have to feel happy about that. That's why top-down analysis is very important. Today we did our top-down analysis until 1 minute level. Why we did until 1 minute level? Because such a strong up move happened for this particular stock, especially from 1 o'clock onwards. That's why we were able to analyze in an accurate way. We got a trade. It is almost about to stop out, but before that it has given intraday. Because in this candle, most of the supply it is consumed almost till the distal line. Just distal line, there might be so many pending orders which pushed the prices down. Next time again when it is moved, see, easily it passed. There was some fight here. Maybe institutions kept at the distal line and a little above that some orders, pending orders. Again it has given a small push down, but it is not, the strength is not enough for this particular stock at this point of time, because the demand is even much stronger than the supply. That's why sometime there was a fight happened here, and after that then the complete supply is over at this area, and then prices moved up and up. Finally, when you are looking from 75 minutes point of view, it looks like your 75 minute supply is broken easily. Yes, it is broken. Those who are looking for short-term trade, you got loss today. We have to accept our loss. Only intraday traders only got the profit. They are a little bit lucky. Narrowly they escaped. At the distal line, again prices went down and reached the target. But what about if you are not an intraday trader? If you are a short-term trader, how much loss we got? For short-term traders who are not intraday, who didn't look for intraday target, probably you got 80 paisa loss, which is 1200 rupees. So this is your entry and this is your exit point. So which is, but most of the time what we do, we may not keep our stop loss here. We will extend till the distal line of this 75 minutes. Probably you may keep your zone like this. This is your entry zone. Entry is at 15 minutes, sorry, at 15 minutes, yeah. Entry is at 15 minutes only, but your exit is at 75 minutes level. Most of the time we manage risk like that. Because sometimes what happens, the price go a little above that 15 minute zone, again they turn and come down. That's why for the risk management point of view, most of the time we follow this technique. If this risk is within your limit, probably you will go for such kind of trade setup. If your risk is not like this, the previously what I did, something like this. Because you cannot, maybe you have to bear the risk in case if it is went up, probably you have to exit, but again it came down, and if it come down, you miss the opportunity. Why you go for such kind of trade? Because you are feeling risk is high. But if the risk is manageable, this is going to be. But most of the people, I can say 90% of the people follow such kind of trade setup. Then if that is the case, now risk is increased. What is our loss now? Now your loss is 1 rupee 90 paisa for each stock. For one future slot, it is 2,850. 2,850 rupees is acceptable risk. And the loss is 1.91%. So your return on the investment is minus 1.96. That is your loss. In general, as per our risk management point of view, from your capital, you accept a risk up to 2%. So 1.91% is within the acceptable risk. So short-term traders would have got a maximum of 2,850 loss, or a minimum of 1,200 loss, whichever the strategy you followed, probably. If I would have taken a short-term trade, definitely I go for this kind of risk management. I take I keep my stop loss at 75 minutes level. The reason is I can bear a risk up to 3,000 or 3,200 or maximum 3,500 rupees risk for each future slot. But intraday traders, you got the trade today. Even though this zone is stopped out, but before stopped out, you got a successful intraday trade where you got 7,575 rupees profit. You got 7,575, which is 5% return on the investment. So this is about ICICI Prudential. So the stock is given intraday profit. At the same time, the stock has given short-term point of view, it has given the loss. So same stock we got profit, we got loss from two different views. One is intraday view and another one is short-term trade view. Short-term trade, those who carried the positions for the next day or the next 1 or 2 days. So we have to accept. So we can say this is the third time for the last 2 months. This is the third stock stopped out. Because I've been waiting for the last 1.5 months when my stock is going to be stopped out. And finally today it happened. But it happened at short-term trade point of view, not intraday trade point of view. Still intraday, it is a successful trade. So this is what you should understand, how we are able to capture the profits. That is very, very important. Why I am focusing on the intraday? Most of the times, I am not looking for the intraday trades. I am looking for short-term trades only, but we are booking the profits during the intraday. whatever the profits we are supposed to get in next 2 days or 3 days, all those profits we are getting during the intraday because we are trading at high liquidity zones. This is the point you should observe. We are not taking the DIT trades, daily income trade, that is your intraday trades. We are taking DIT, daily income trades we are taking. All these days we are taking DIT trades only. For the last, almost for the last 1.5 months, we are taking DIT trades, but we are getting the return during the intraday itself. Because high liquidity zones are having such a power to give DIT profits within the same intraday. Which positions we are carrying for the next day or next 2 days or 3 days? WIT trades. WIT trades, mostly you get the profits within 1 week or a little over 1 week or maybe 1.5 week or 2 weeks in general. But in our high liquidity zones, WIT trades, we are getting the profits in maximum next 2 to 3 days. Especially high liquidity zones, we are talking about high liquidity zones. Normal zones, you have to wait for 1 week or 1.5 week time to get the profit. But that is not the case with high liquidity zones. What about MIT trades, monthly income trades? MIT trades, you have to wait for at least 1 month time or 3 weeks time or 1 month time or 5 or 6 weeks time. Between you will be getting the profit. But what about our high liquidity zones? High liquidity zones are giving MIT profits maximum in a week time. From one demand zone to another, the next supply zone or supply zone to the demand zone, the prices are traveling within a week time period. If not a week, maybe another 2 or 3 days extra, not more than that. Sometimes we may get the returns in 4 days or 5 days itself. That is what happening with MIT trades. Why it is happening? Because high liquidity zones are having such a power to push the prices down. Okay, and the next trade from our, this is the last stock from our yesterday's report, Tata Communication. And this is also not reached into our high liquidity supply zone. But one stock I want to show you, Bank of Baroda. And when we got this trade? On Friday. Friday we have seen it has given a good intraday. Not very good, only around 3% return only it has given. But those who carried the positions for short-term trade, yesterday they got the return. It has given 22,000 rupees return it has given from here to here. But today see the fall again, another 2% down. See the next demand zone it is about to reach. But here the next demand zone is a high liquidity demand zone. This is a high liquidity demand zone and this is a high liquidity supply zone. Same thing, see what's happened for HDFCAMC. Same thing probably might happen for Bank of Baroda for next few days. Or next maybe 1 or 2 weeks also. If institutions are keep on creating new demands and supplies within the supply zone and within this demand zone. Due to any reasons, if the market conditions are dynamic, due to any reasons, if they don't want to create a new demand or supply, probably one of these zones will be broken. But this demand is already tested. First time, second time, third time, fourth time, now probably fifth test. Before that one more, sixth all. Yeah, this is the first one, this is the second one, this is the third one, entry buffer is there, so that will be taken as a trade only. This is the third one. This is the fourth one. This is the fifth one. Now this is going to be the sixth one. How it is holding the prices for all these days. This is what we should understand about high liquidity zones. Somebody told us, what is that? You should not trade a zone if it is not a fresh. And that point we are keeping in our mind. Because it is already tested, we don't want to take this zone. But the real essence, we are not learning. The strategies we are not learning. Only that point, somebody who is not having a mature knowledge, they have explained to you and you are believing that whatever he explained is a correct concept. Maybe they might have given that explanation because you are an inexperienced person. Probably those trainers are not having knowledge about high liquidity zones, and they don't want to make you trouble by taking some risk with the second test or third test. They have framed a rule: don't go for a zone having if it is not a fresh zone. But where we are getting the real money we are getting in the high liquidity zones, because that is having the capacity to push the price up if it is a demand zone, or if to push the price down with it is a supply zone. How it is pushing? Whatever the return you are supposed to get within a week period, that return you are getting in just 1 or 2 days. That kind of push these high liquidity zones are giving. That's why I defined a strategy. What is a strategy? How to deal with high liquidity zones. Still we are taking our trades in the fresh zones only. We are not deviating from that point. But what we are doing, we are adopted a strategy. If it is a high liquidity zone having multiple tests, we are using that zone only as a higher time frame zone, not as an entry zone. These high liquidity, especially the daily high liquidity zone, should be used as higher time frame zones. Then where you have to take an entry at 75, one time frame below, that is 75 minutes level. There we are fine tuning that 75 minutes. Again we are fine tuning to either 15 minutes or 5 minutes level to minimize the risk, because risk is very important here, risk management. So these are the points you should consider. See, Bank of Baroda, this is an MIT trade. Now look into the price. This is an MIT trade. This is the daily demand zone and this is the daily supply zone. Prices are moving from daily supply zone to daily demand zone. See how fast the prices are falling down. What is the reason? This is a fresh high liquidity daily demand zone. First time prices entered into this. And inside we found fresh 75-minute zone which pushed the prices down. Friday the demand is very high. It stayed some time inside this zone near this 75 minutes. But 75 minutes gave a very small rejection. But yesterday, see, with a gap, it came down. Today, again, further. Tomorrow, is it going to enter into this demand zone? We don't know. Maybe it may go up. If there is any supply, that may, in between, if there is any 75-minute supply, probably it will push down into this high liquidity demand zone. Suppose tomorrow if prices enters into this is a lucky scenario. Most of the times it won't happen. Between a demand zone and supply zone, we can see some swings. Before reaching a swing will be there, price will go up and then again it will come back. Because it will go up and come back, that is eating our time. Why we are getting better returns during the intraday? Because intraday the swings are very minimal. But daily level swing, next 2 candles or 3 candles, if it go up, that means 3 days. It has eaten our time. Eating our time means we are losing our opportunity. Maybe in a new stock, in a new trade, you would have invested your money. That opportunity we are missing. Finally, after maybe a week time or 1.5 week time, we are getting the returns. When you have to look for such kind of long trades, if you don't have much option to select the stocks, then you have to look for whichever the stock you got. Maybe even though if there are some swings, there is some delay in getting your profit, you wait patiently, finally you get a very good profit. Maybe some 40,000 rupees, something like that, you will get profit by the time it reach into this zone. But we have a software. Every day our software is providing stocks near to the high liquidity zones. Apart from normal zones, it is our reports also having high liquidity zones. We are ignoring the normal zones and we are focusing only on the high liquidity zones. I already explained a strategy. As per the strategy, we are looking into the stocks. And we keep on getting the profits. For the last one and a half month, we haven't seen any failure during the intraday trades. During the last one and a half month, this is the first time we have seen a failure. For a short term, those who are holding for the next day or 1 or 2 days, today we have seen the first failure. That is ICICI. Sorry, ICICI Prudential. See the success rate of these high liquidity zones. We have to keep a trust on that. You have to come out of certain concepts what you learned. Probably you are believing that they are the ultimate concepts. If you are thinking like that, you have to change your mindset now. It's the time. We are not deviating from the concept you learned a fresh zone. We are not deviating from that. Our entry zone is always a fresh zone. We are taking care of that. But our higher time frame zone is not a fresh zone. But our higher time frame zone should be or must be a high liquidity zone. Such kind of concept we are implementing. And our fresh zone should be identified inside that high liquidity zone. Inside that high liquidity zone, probably already tested 2 times or 3 times or even 5 times or 6 times. If it is having a fresh 75-minute zone, we are trusting that high liquidity daily zone. Remember, our entry is not at the daily zone. Our entry is at a fresh 75-minute zone, or a deep inside the zone we are taking. Or inside, if we are finding any high liquidity 75-minute zone, again we are taking multiple entries. Maybe at least second, third and level, 3 levels at least we are taking. They give success. 2 or 3 maximum, they give successful trades. We can trust the 75-minute zone is a high liquidity zone. So those who are listening these videos recently, maybe for the last few days or maybe from today, please go through the videos I have published for the last 1 month. Then you will be able to understand how powerful these high liquidity zones are. You will be able to understand how much profits we got for the last 1.5 month. It is a consistently. There is no it's not like 2 days we are getting profit, 2 days we are getting losses. It is not like that. Last 1.5 month, every intraday, whatever we verified, it has given a good return. Around 6.1% return it has given on average. Most of the trades are above 6.1%. Most of the trades. We haven't seen a failure. Even today also we did not see any failure during the intraday trade. Only after 1.5 month we seen a failure for short-term trade where we are carrying the positions for the next day. That too, what is the loss? Minimal loss we got. The loss could be between 1200 and 2850 rupees. Depending on your risk level, how you handled or how you fine-tuned the zone. So hope you understand the power of these high liquidity zones. Every day we are discussing, but you have to, at some point of time, you have to start believing these high liquidity zones. Because I spent a huge amount of effort for developing these algorithms. Waited for several years to fine-tune these algorithms. And finally, the software is doing the magic. It is doing the magic. That is what we have experienced for the last 1.5 month consistently. Not even 1.5 month, the last 2 months. Because for the last 15 days I am saying 1.5 month, 1.5 month. Now 15 days are completed. Now it is going to be last 2 months. Okay, this is about our stock analysis for the stocks generated in our yesterday's report. Remember, we are analyzing only high liquidity zones. Those who wants to know about high liquidity zones, There are few videos are available. Go to NeoStock's terminology section. Go to NeoStock homepage. There you find a terminology session. Under the terminology, you can find a good number of videos that I explained about high liquidity zones. And one special video is there about NeoStock's high liquidity zones. I explained the terminology. What is S underscore DZ? What is R underscore SZ? What is the priority? Which time frame? Which priority they will be having? I have given a detailed explanation. You can look into that. And the recent video, last 2 days or 3 days back, I have published one video. I explained about NeoStocks, how to trade by using NeoStocks high liquidity zones. One of the stocks I have taken an example, like stock, and I gave the explanation. So please go through that video, understand the strategy, then make use of the reports I am publishing every day. Now after this explanation, I am publishing the video. Go through that, I am publishing the reports. Go through that report. Find the stocks near the demand zone. High liquidity zones. And similarly, find the high liquidity supply zones near the supply zone. So now let's move on to report generation. So our entry time frame is daily. Let us find the stocks which are near to the demand zone. So 6 stocks are listed. And these stocks are having a supply zone and demand zone. This is for the current price, what is the nearest supply zone and what is the nearest demand zone? I am publishing in this report. You have to look into this zone column. In the zone column, the high liquidity zones will be there. Okay, we are looking for Bank of Baroda. Bank of Baroda is having a high liquidity supply zone. Previously, 2 days back, we got an entry. Now prices are about to reach to high liquidity demand zone. Bank of Baroda, see here. This is the high liquidity supply zone. We got an entry few days back, that is last Friday. Now see how the prices. Now it is reaching high liquidity demand zone. It is also supporting multiple tests. But once it is reached, what is our trade setup? Inside this, you need to find a fresh zone. Recently, we got, I think few days back, we got this entry here. See, that day we fine-tuned. We got an excellent intraday return. But within how many days it moved to the supply zone? 1, 2, 3, 4, 5, 6, 7. In 7 trading sessions. That means almost 1.5 weeks because 2 days, Saturday, Sunday holidays are there. So we have 5 trading sessions, 1 week, 1, 2, 3, 4, 5, and 2 more trading sessions, say 1.5 weeks. It reached the supply zone. Probably it has given around maybe 40,000 or 50,000 return. We have taken this trade. That day we fine-tuned this zone. When? On 26th October. And again, last Friday, we got an entry, see how prices are coming down. Maybe tomorrow it may go directly into this, or maybe it may another 2 or 3 candles, see how there is some price action. It went near and again came down, again it pushed. Same thing. Maybe again it may go up, maybe 1 or 2 candles, again it will come down. That means within 1 week or 1.5 week, we are getting maybe this time again another 40 or 50,000 return you will be getting once again. And we identified this stock few days back on 26th October. Probably on 25th October report, we might have got this stock. But what we are analyzing every day, intraday we are analyzing at least minimum return. Generally people are happy with 1%, 2% intraday return. But we are looking for at least around 6% intraday, around maybe 5%. Today, see one of the stocks we got only 5%. Yesterday, we got one stock for 7.6% during the intraday. So finally, on an average, it is 6.1% intraday returns we are getting. But we are not really focusing on these MIT trades. But MIT also they are giving. Look into this chart. It went up and again it went down. Same thing we have seen in HDFCAMC. If you are able to find a stock having both high liquidity demand zone, high liquidity supply zone, that is a stock will give you a lot of money. That is what we have seen in HDFCAMC. Continuously for the last 1 week it is giving. Even look into this stock. From here to high liquidity zone, again high liquidity zones to high liquidity demand zone. Until one of these zones broken, it will keep on giving us return. The prices will be moving here only, up and down, until one of these zones is broken. When one of these zones broken, that also explained. When you don't find any fresh 75-minute zone, mostly the stock will be broken. Okay, so let's go back. So we got a Bank of Baroda on high liquidity zone. And what else we have? Hindustan Unilever, even though it is high liquidity zone, we don't take this because the pierced count, this column PIE, pierced. It is already pierced 7 times. So we don't look into the pierced zones. But why we are keeping? Because with the help of these pierced zones, just below this demand zone, we may find a traps, institutional traps. There is a bear trap below this demand zone. That way, these pierced zones will be helpful to us. If prices are entering into those bear trap, that will give a good opportunity. So this is about high liquidity demand zones. We have only one high liquidity valid demand zone in this list. So let's go back. Entry time frame is daily. Let us find the stocks which are near to the daily supply zone. So ABB is still valid. Yesterday also it is there and today also it is generated. And the CIPLA, again prices are entering into this. Already tested once. IRCTC, this is a fresh zone. Low on the curve. If it is a low on the curve, if it is a supply zone, you should look for only intraday trade only. I clearly explained this point several times. A supply zone at low on the curve. Which supply? High liquidity supply zone at low on the curve. Look for intraday trade only. Don't go for short-term trades. Similarly, a high liquidity demand zone at high on the curve. You should look for only intraday trade only. So that's why always you should observe the column curve. You should focus curve or location. Both are same. What is the next one? Zindal Steel. It is a fresh zone, high on the curve. High on the curve and supply zone is excellent. See the probability enhancers, odd enhancers. The score is 13 out of 15. It is having a very good score. Zindal Steel and what else we have? High liquidity supply zones. That's it. And remaining, all these are all high liquidity demand zones. You may ask a question, can I look into these stocks? Yes, you can look into these stocks, but at present prices are not near to these demand zones. Now this report is about prices near to the supply zones. See, if the risk reward is very small, probably UBL, maybe prices may reach tomorrow again to this. See, only 0.06% only. You may ask a question, if the reward is such a small, how can we get profits? You will get profit because you are fine tuning at 75 minutes level and 15 minutes level. There you take a deep entry. The moment you go deep, you definitely you get 1% return on the investment. 1% return on futures is nearly equivalent to, it is close to 6.6% return on the investment for one future slot. That is one futures point of view. I mean futures trade point of view. If you are option traders, think from the options point of view. Okay, this is about stocks near the supply zone. Now let me go back and generate the stocks closed inside demand and supply zones. Entry time frame is daily. Let us find the stocks which are closed inside daily demand zone. So only 9 stocks are listed where price closed inside the daily demand zone. So let me go back. Entry time frame is daily. Let us find the stocks which are closed inside daily supply zone. Let me scroll down. See, if you want to refer any of these stocks, you have to pause the video and then you have to refer these stocks. I may not be giving more time here. You have to pause the video. So total 59 stocks are there inside the supply zones. So should be careful. If all the supplies are pushing, that effect will be there on the index as well. That is Nifty and Bank Nifty. So let me go back. Let us find the tested zones. Entry time frame is daily. Let us find the tested daily demand zones. So these 7 daily demand zones are tested today. So let me go back. For entry time frame daily, let us find the tested daily supply zones. So these 11 stocks are tested today. The Coromandel is tested, but price did not enter into our zone. So let's go back. Let us find the newly created zones. Entry time frame is daily. Let us find the stocks having the newly created demand zones. These 11 stocks are having newly created demand zones. Let me go back. Entry time frame daily. Let us find the newly created supply zones. The stocks having newly created supply zones. These 3 stocks are having newly created daily supply zones. So this is the filtered list. Now I will generate demand and supply zones for all the stocks for our reference purpose. So entry time frame is daily. I'm generating all the stocks. So I will keep on scrolling this list down. Whichever the stock you want to refer, there you pause the video and you can study the parameters of that stock. You can go through all these columns. We have trend, we have zone type, we have pattern, how many test count, rejection count, closed inside the zone CIZ, PIE means pierced, ZA means zone, achievement, VOZ is violated opposing zone, VOP is violated opposing pivot. And even we have curve, EQB means equilibrium, LOC means low on curve, HOC means high on curve in these column values. And you have odd enhancer score out of 15, and the leg-in date, and how many base candles, and the leg-out date. So this date will help you, finding the leg-in and leg-out in our charts. And what is the zone high, what is the zone low. and what is the risk of the zone in terms of the percentage, and what is the reward in terms of the percentage. Or risk by reward or reward by risk, whichever the way you calculate, you will be getting RR. You can easily do that. By taking a calculator, you can get RR. Okay, I'm keep on scrolling. Wherever you want, you please pause the video. So this is the complete list. I hope this information is useful to you for your further analysis and study. So let us all meet again in our next video. Thank you.